Good afternoon, Maverick traders. It's Joe with you here. It's October 30th. Let's get into a market roundup. I'm going to go over meaningful news of the day. Let's take a look at things technically, and if we got some trades, which I've got a couple, we're going to go ahead and share them with our community.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
As we move into the market analysis, folks, we had another consolidation day. We are seeing a lot of volatility, but hey, well, let's just jump straight into the daily news. More consolidation overall as the diamonds actually pull back to a support level. So I'm seeing these markets kind of settle in at areas that they seemed comfortable with, and these are optimistic levels. Even the diamonds has got to pull back to a very strong support level. So it's the earnings results that is actually causing this push-pull. I mean, today we had a big move to the upside. We came falling really hard down to close pretty much flat, but it's pretty much driven by the earnings results on some of these larger companies, which we're actually getting into pretty deep right now. So let's not confuse the two. How do we finish overall? Flat. Dow's down, S&P's down, Q's down just over 0.5%. But look at the Russell. I mean, that's as flat as it gets on something as active as that. Advanced decline line, 56 declining, 37% advancing, 48% below the 50 and 52 above the 50. So it's just flat. It's consolidating. We're seeing a lot of money being put elsewhere in one, out of the other, and a lot of it is driven off some of those earnings results. So let's just jump straight into it. We don't have much to go off of when it comes to the overall chart. We're still in this nice little high base, but folks, we like high bases. Yeah, sure, we had a little bit of a pullback here, but high bases, strength, high base, breakout, strength. So we just got to chart what's in front of us. We got a whole lot of politics going on. We're coming up. We also got a whole lot of some crazy economic numbers I'm going to get to today here, and earnings results. So it can be an emotional market to trade, but overall price action says nothing's really changed. Here's the Qs. Actually, this is actually showing a little bit more strength. Nice little move to the upside coming out of last week, and it's just consolidating up at these areas. Obviously, we've got a bunch of earnings coming out here specific to this sector, which we'll see where that goes, right? But that's kind of where we're at. Not a lot of change from yesterday. Our outlook and our posturing hasn't changed. We just need to be super aware of what's about to announce and know that something's pretty volatile is probably going to happen. So we just got to prepare ourselves for that. So let's get into our heat map. And it's based on earnings, what's coming up. Here's Google, beat up 2.92%. Amazon is coming out, I believe in the next day or so. I've got a list coming up here in a second, folks. Microsoft as well. So we're on cusp for right at the precipice, I should say, of a whole bunch of these larger companies announcing. I think Microsoft is due out here any minute, things of that nature. In fact, if you guys want to zoom in deeper to this, we got the days to day sector performance, and guess what was the worst performing sector today? Technology. Gee, I wonder why. Things missed. But guess what the best performing sector today was? Communication services. Okay. So it's just a little bit too reactive because these companies that are so big, you guys can see them and how big they represent. All they have to do is make a mistake or do something good, and it can change the whole aspect of the market. Now, just for the day, because take a look at our outlook, folks. This hasn't changed. And I'm not going to change it. My weekly outlook, +1. I dropped it to a 0 because I see some consolidation there. But the monthly outlook is still +3. It's still a positive chart. It's still uptrending, and it's still showing a high base, regardless of how many fun things are coming up. So let's just jump into those. Now, as far as my potential trades, folks, I have absolutely, in all honesty, pared back over the last few weeks on my trades. You've seen them. We've been following a whole bunch of the trades that are out. I have still. They're great. The ones that are coming off, that's fine. I decided, hey, I got to at least throw a couple out because my activity or what I want to do as an active trader right now is very turned down. I liked SkyWest. Rob talked about Delta Airlines. So I figured, hey, if you don't like Delta, let's take a look at SkyWest. Qualcomm has been my sideways trade for a while. It does have earnings coming up on the 5th. I'll show that to you in a second, but it is doing really nicely as a consolidation or range-bound trade. And then I figured, hey, let's throw out another bear out there that you haven't seen in a bit. This is CVS. Nothing's really changed when it comes to what's bearish and bullish. Now, the potential bull side, sure. I've seen some jump ups lately as airlines. I also received an email from one of our Mavericks talking about love, Southwest Airlines. And it actually has a really good chart as well if you want to check that out. So let's take a look at our first. This is bull, this is SkyWest. I just love the nice move up. Look, well, let me get the line first, folks. So I liked this breakout above that resistance. But what I really liked was the move after that. A huge surge to the upside. Not a lot of volume, so it wasn't that it was being purchased a lot, but boy, it just hung in there. Not a lot of people willing to sell it. A very shallow pullback, and it looks like it's going to try to push out of a high base here. So sideways to up, I'm not going to be overly bullish or overly bearish in anything that I choose to put on into the election. I'm just not going to be a +3, -3 guy. There's no reason to. If it continues to show outperformance, diagonal spread, kind of a +1 outlook might not be bad if you folks are looking for a position. If not, that's fine. Let's get to Qualcomm. Something been sideways for a while. It still looks like it's going to stay in there, right? The 177, I think we've been talking the 177, 165 area, but we do have earnings here coming up in November 5th. So anybody that's in this or anybody that's looking to maybe throw in something sideways, let's make sure that you're aware that the fact that this will announce on the 5th of November. If you don't want to do sideways, don't. I don't blame you. So let's get into CVS. I just like the way that this kind of fell apart. It looks like it's just trying to hold on to some support levels that have saved it in the past. It also has its earnings probably around that first week of November. These trades, folks, I'm telling you, I don't know if you can tell, but they're difficult for me to find and to create and share because the probability versus the risk reward on these, to me personally as a trader, it doesn't make a lot of sense. So I figured I'd share something, but I'm a little reluctant to make any sort of larger trade moving forward here in the next little bit. Consolidation creates difficulty in directional trading. Oh, geez, Joe, tell me something I don't know, right? As things consolidate, are we going to go higher or lower? Now, this is directly regarding sentiment. So what we do with consolidation is we take a look at what it's been doing in the past, and this is definitely a +3 market. It is a very bullish, very strong market. In all of them, the Qs, even with the diamonds with a pullback, it's still showing some strength. So we go down to the next one. Earnings results adds to this volatility, but it has little impact on the overall market sentiment. So even though we're getting these big moves, these volatile jumps up and down, and good news, bad news, it doesn't really pan out when it comes to the overall motion of the ocean. So it becomes confusing. We can have a day that we've got 4 or 5 large companies that miss earnings, and it looks like it's the end of the world. It's not a sentimental change. It's just the fact that we had some very large players make a move that impacted the market for that shorter term. So it's difficult to kind of see the forest through the trees here, guys. Just make sure you follow along on the sentiment more so than the overall giant earnings results that some of these guys are playing in. Let's just go ahead and take a look at them. We got Microsoft, Meta, AMGN, Starbucks, Dash, but we got Apple tomorrow. So tonight is the top row. Tomorrow we've got Apple, Amazon, MasterCard, Merck, which is one of our bear trades that I like, but that might be something to maybe to monitor your position on as it goes into its earnings. Comcast, a whole slew coming up. So I expect nothing more than more tumultuousness. I expect nothing more than more volatility. But make sure you understand, big companies react, and then that's it. The impact it has on the market, we can't see until a few days have passed. Economic reports, a huge jump in ADP ADP employment, 233K jobs versus 110K. That is way off. That is a big move to hiring. I'm not sure if that's a seasonal thing. I'm not sure where that number is, if it's a one-off, but okay, we'll let that slide. The markets didn't seem to care much about it. They started off strong, but boy, they gave back a whole lot. Pending home sales, also big jump, 7.4% versus expected 1.9%. Is this your last-ditch effort? So much conversation with any of these numbers, but when you see them start to react like this, then we know there's a little bit more urgency going towards whatever is coming. And I truly have to echo what everybody's been talking about. It's a lot to do, I think, with elections. So far, we've got a soft landing in the Fed, so that makes it even more difficult for traders to see, are we actually going to go to a slowdown in economic growth, or are we going to continue to stay on track? And right now, we are on track. So I think a lot of traders are out there are just left to make a decision emotionally. GDP for Q3, 2.8% versus 3.1%, slightly lower than expected. But once again, that's expected by the Fed when it comes to a soft landing. We will always get a revision, so the GDP number has to be read 2 or 3 times before we can kind of figure out where it's really going. We will see the PCE tomorrow. It'll be interesting to see how the markets react to that, or if Powell comes out and makes any sort of statements against it. So we got plenty out there to justify volatility, but we just got to go back to the sentiment. Unless sentiment changes, the volatility is just noise. And the further we can stay away from it, the better, which is why I personally have kind of dialed down as of late. All right, folks, I hope this was helpful. Thanks for joining me. We'll talk to you next time. Bye, everybody.